Welcome to episode 6 in my monthly series where I review my dividend stock picks of the month from a year ago. So many YouTubers have stock pick videos where they present their opinions on certain stocks or funds and why you should buy them now, but there's usually no follow-up after, right? Were they right? Were they wrong? We don't really know in most cases. So that's why I decided, to be fair to all my viewers, to revisit my old stock picks to actually find out if they were good picks or not. So in this video, I will go back, revisit my stock picks of the month from a year ago and check how the stock or fund is doing right now. So it's time to review my stock picks for the month of September 2020. I will not only check the share price, but also the status of the dividend or distribution, which is even more important for income investors like us. So was I right? Was I wrong? Let's find out together right now. All right, so let's check out the picks for September. The first pick was HPF, the Energy Leaders Plus Income from Harvest. So this had a monthly dividend of 3 cents a share, or 36 cents a year annually, 36 cents annually. We all know what happened, right? They did reduce their dividend, but we'll check it out in the report card a little later. So at the time, this fund was giving a phenomenal 16% yield. You could actually see the discount between the 1 year price and the price that during the pick, right? 224 compared to 424. So as we know, this ETF holds 20 really big blue chip global energy companies, and it uses a covered call strategy to boost the yield. So my key points and reasoning for this pick should be no surprise. Energy sectors were really battered and hit hard during COVID-19. So this put pressure on oil prices. So keep in mind, September 2020, we were still in the thick of COVID-19. And I also stated that oil prices were starting to recover gradually. Travel demand was recovering, and there's also good performance during market volatility because of the covered calls, right? So covered call funds do well during volatility because the covered call option premiums that they sell or that the fund manager sells goes up in value. Pick number 2 was Inc.UN, Income Financial Trust from Quadravest. So they have a monthly dividend. At the time, it was 78 cents a share, but right now it's much higher. But that's just how the fund works, right? The fund's dividend changes monthly based on stock price. It's 10% of the stock price, but we'll talk a little bit about it later. So this is really one of Quadravest's only closed-end funds, this one and DS. Everything else they have are split share funds. So this is not a split fund, it's a regular closed-end fund, and it holds, like the name says, a variety of North American financial stocks. So both Canadian, and American. We're talking about banks, life insurance companies, and asset managers. So a nice big portfolio, but only financial companies. And it also uses the covered call strategy. So you have the breakdown here. It's about half-half. And my key points in reasoning: at the time, the financial sector was very undervalued and under pressure because of COVID-19. This fund has been around for a really long time, since 1999. Easy way to get a piece of all the financials with one fund, right? And like I wrote here, the monthly dividend is not set in stone. It varies monthly and is set at 10% of the fund's NAV. I wrote NAV, but it's actually 10% of the fund's stock price, not NAV. So as the stock prices increases, not the NAV, so does the dividend. And this is the case today. Inc.UN has an enormous yield. If you've seen my portfolio unveil videos, you see that I have a very big yield on it, because as the share price goes up, so does the dividend yield. Pick number 3 was Slate Grocery REIT, one of the only single REITs that I still own and that I love. It's one of my favorites. So this, like the name says, Slate Grocery REIT, it used to be called Slate Retail REIT. They changed it to grocery just so they could get rid of that retail in the name. So they own grocery anchored real estate, so in the US, so all grocery chains and pharmacies and things like that. It's managed by Slate Asset Management. These guys also operate and manage Slate Office REIT, SOT.UN, which is another one of the single REITs that I love and that I still own. So the monthly dividend at 86 cents a share, just over 86 cents a share US. So at the time of the pick, it was 10.08, which gave you a yield of 11.31%, which is pretty good already. So my key points in reasoning is that, just like the other picks, right, real estate, especially retail, was extremely undervalued because of COVID-19, as many non-essential businesses had to close temporarily. But this REIT I wrote here has a really good strategy to focus on grocery anchored real estate, which did not have to shut down because they're considered essential businesses. So this REIT had no dividend reductions. It also had a good history of raising dividends over time, and it's a very cool REIT for us Canadians because it invests in the US retail space, or the US retail property space. So those are my key points and reasoning. So how did my picks do? How are they doing right now 1 year later? Well, let's check out the report card together. All right, guys, let's check out the report card to see how my picks are doing right now 1 year later. So we'll start with HPF. So this is the Energy Leaders Plus Income Fund from ETF from Harvest, so focused on energy. So right now the stock price is 261, so from 224 it's an increase of over 16%, which is really good. Unfortunately, we all know what happened with the dividend. They reduced it by 66% from 36 cents a year to 12 cents a year, so it's only 1 cent a month right now. So the yield is about went from 16 to something like 5 or 6%. So I put was it a good pick? I put neutral because you still made a 16.5% capital gain, which is pretty good, but unfortunately the dividend was reduced. I think it was exaggerated. I think that eventually maybe they'll make an announcement that they're going to increase it from 12 cents to 18 cents, or from 1 cent a month to 2 cents a month, 24 cents that would be. I just have a strong suspicion because when you look at if you look up this fund on their website, you can see that the average dividend yield of the portfolio is actually just the dividends is very close to the current dividend yield. So they could easily increase the dividend with the covered call income. I'm not sure why they haven't increased the dividend yet. Maybe they're trying to rebuild the fund. I'm not sure. But either way, neutral pick, not great, not horrible either, because of the relatively good share price change. Up 16.5% in 1 year is not bad. The other two were really good picks compared. So the Income Financial Trust from Quadravest was the absolute big winner this month. The price went from $7.77 to $16.70. I mean, it's a 114%, almost 115% increase. Not only that, but the dividend went up because, like I mentioned earlier, the dividend is based on the stock price. So the dividend went up as designed. That's why I put as designed there in the description. And a massive price, more than double. So an absolutely phenomenal pick. Inc.UN, the big winner. Grocery Retail REIT was also a great pick. It's up almost 35% in a year, and the dividend hasn't changed. They never missed a beat. So it went from 10.08 to 13.57 right now approximately. So a nice increase, plus the dividend didn't change. So I would say a solid maybe A- or B+ this month because of the HPF. My intention or my reasoning and philosophy was good with HPF, but unfortunately they did cut their dividend, which I did expect a dividend cut to come, but not that aggressive, a 66% cut. But either way, we all know, or you should know now, that NXF is my go-to when it comes to an energy fund, not HPF, but I'll closely monitor HPF because who knows, they might increase the dividend one day. So there's the report card, guys. Pretty good this month as well. There you go, guys. Hope you enjoyed the video. Of course, don't forget you could download the report card on my website, passiveincomeinvesting.ca, so you could see the report card for all the other months that I've already covered in previous videos. And also on my website, don't forget you could access my digital product, the Ultimate Dividend Passive Income Investing Package, which is all my years of research put in one package. It's great for Canadians, great for Americans. It has sample portfolios, so make sure to pick it up as it comes with lifetime updates, so you only need to buy it once. As always, please don't forget to support us, so click that like button. It's free for you. It helps the channel out, so it's a win-win, and I would greatly appreciate it. Also, make sure that you're subscribed so you don't miss out on our future content on passive income investing, which is all really designed to help you on your investing journey. We're also on social media. Make sure to join us there. We're on Instagram. We have a Facebook group that keeps growing, almost at 3,000 members. So we have a nice little community there. So make sure to join us if you use those social media platforms. The mission of this channel is always the same, guys. It's to help everyday normal people invest on their own so they could build their own stream of passive income to enhance their quality of life. So with that, take care, guys. Stay safe and see you next time.